well, let's get into it. So we're on the NAS today. We're on the 2 minute. No, we're on the 2 minute. Alright, so I'm going to be talking about ICT concepts, the ATM model and RS model. It's the two models I follow. I only trade really New York session. Sometimes I look at London, depending on the day, but I like to trade between 4:30 to 5:30, 6:30, also depending on the day. Obviously, if there's news, I try not to trade, and then Mondays and Fridays I try not to trade. Obviously I do look at the market. If something presents itself, I'm obviously going to be interested, but I try not to trade during news and Mondays and Fridays. So let's dive right into this. First things first, I'm on the 2 minute. Indicators I do like using, just my ICT kill zones, just tells me where my London session and New York session are. I did make my New York session from 7 a.m. to 9 a.m. I just felt through testing it's better for the highs and the lows to get hit for continuation in the opposite direction, but I'll run through that now. So first things first, we're going to start. So obviously we wait for 9:30. Just let this play out. Alright, so it's 9:30, right? Now what's happened is, what I like to do, obviously I got my London high and London low here, but I just mark additional London low and my London high. Normally I wouldn't mark it once it's been taken before the 9:30, but obviously this was taken after 9:30, so I just gonna mark it down. Then New York session high, call it my buy side, and then my New York session low would be my sell side liquidity, which has also been swept. Okay, so how I analyze this is, I wait for 9:30. I wait probably until 9:35 before I'm even in a trade. I don't take that first initial move down or up. I wait for it to take either sell side or buy side, and then I'll target opposing liquidity. So because it's taken sell side, London low included, it took sell side. Now I'm waiting for my ATM model. Now my ATM model setup is going to go as follows, right? I'm looking for an inversion, right? But it needs to be back into the zone. So between the sell side liquidity and my buy side liquidity, that zone, it needs to be in there before I take a trade targeting buy side liquidity, opposite liquidity to what was just previously taken, right? So I'm going to let this play out, right? It has taken sell side, so now I'm looking for longs. Okay. Now as we see here, I have a 2 minute fair value gap which is now inversion fair value gap because it's been swept. So my trade would be in this area. Once that closes below the fair value gap, I'll take a trade. Here I'll put my stop loss just below the inversion, and I will target my buy side liquidity. Nice risk to reward, little 5-to-1 ratio. Obviously, yeah, I missed the, okay, so it got hit. Now another model I would use, say now this doesn't set up right, it just continues down. Well, let's actually look, so let's look what the market does quickly. Okay, so now we've created what I like to call a swing high. So once the market takes out sell side, it moves upside, right? Once it takes upside, buy side, it's going to create a swing high. And the market's always going to test back to equilibrium, right? So I'll go, just to make it more clear, I'll go my 5-minute. I'll draw my Fibonacci from the low to the high, and I'm waiting for the market to hit that midpoint, which it has done. Normally I would just target the 5-minute fair value gap. Not necessarily the 5-minute, just depending on like the market. Like 2-minute looks good, yeah, just obviously it all depends. I do like the 2-minute because it's more clear, right? So what it tends to do is bounce off that and continue to take out the swing high, right? So you wait. You do not take the trade to the unmitigated gap, which is now mitigated. You wait for it to retest, and then you target your swing high. So let's remove that. Now we've got a nice big wick, which is great. So I would probably wait for that candlestick to close. Also, I'm just going to play out a little bit here. Okay, so I'd wait for that to close. Pop it there, and I'd probably put, just for safety, normally I'd put it at the wick, but just for safety, I'll put it just below the fair value gap, and I'll target my swing high. Now, what I normally do with this trade, this is the RS model. The one I explained before, that was the ATM model. I'll go into more detail if there are any questions. If you don't really understand, because I did explain it quite briefly, just let me know. I'll try explain it a little bit better. But with this RS model, I'll target the swing high, but then I'll take partials. Just let it ride until I see the market's not continuing in that direction, but I'll show you now. So takes out that swing high. Okay, takes out that swing high. So I'll take partials, See, that's still holding that midpoint, that fair value gap. So I would set my I would set my take profit to break even, right? Because if it passes that, I don't want to risk it, because it could go down again. So if it hits that, it is what it is. You did win your trade. But yeah, it hasn't hit that, so we still could take in partials. I just like this because sometimes it goes up. So now once that initial run happens, I'd move my stop loss up just before that fair value gap. Yeah, alright, we got stopped out. Well, that was a nice 3-to-1 ratio. Those are my two models. Now, once those set up, I'm done. Sometimes I'll wait till 10. I'll wait till 10, and then what can happen is you can mark down your overnight low, and you can mark down your 10 o'clock high. So what's nice about your open range low and high, right? Once it passes that, it's very unlikely for it to go to the opposite direction. It has happened, but it's very unlikely. If you've got a strong bias, that's just extra confluence. That's why I mark it down. But you'll see it kind of bounces off. Obviously, we got that fair value gap, but it definitely bounces off the open range low. Now, what you could do, sometimes I do it. It's not my favorite model, but it works. I just don't like to trade too long. My ATM model doesn't set up, or my RS model doesn't set up, then I'm done for today. But what tends to happen sometimes is, let's look on the 5 minutes here. There is I made it get a gap here, right? Now, what sometimes happen market's got to go back to that at some point, right? Obviously, it's going to push higher. Well, you don't really know what it's going to do, so you just kind of wait. There's kind of get disrespected, just broke a key level, so it's plummeting. It's probably targeting this right now. Let's see what it does. See, it's 2, right? It's 2. I'm never trading this long. I'm probably calling it. Yeah, I'm probably calling it around here, 11 today. I'm trading today at 4:30. I'm probably going to go live again. I will be doing a live session with these models I've just explained. Yeah, be on the lookout for that. I will then catch you at 4:30. Thanks for tuning in. I'll see you guys at 4:30.